We got a lot going on this week. Not only do we have massive tech earnings this week, but we also have FOMC statement, the Fed interest rate decision, and the Fed press conference. We have a lot going on this week, and on top of that, we also have some incredible setups for this week. So in this video, I want to go over to keep you guys prepared for this week and what to expect. Subscribe with notifications on. We're almost at 5,000 subscribers. SundayStockTalk.com, and follow me on Twitter, and let's get started. So the first thing that we have is the economic calendar. Okay, Wednesday is going to be a massive day for the market. We have the FOMC statement and we have the Fed interest rate decision. So this is going to be a very important, and at the end of the day, it's just a hit or miss. We either go up, we either go down, but it's going to be very volatile, and everyone is going to be watching on what the Fed has to say on the economy, on inflation, and on the Fed interest rate decision. So this is just going to be a hit or miss on Wednesday, July 26th, this Wednesday. So as long as if you're not over leveraged, or just be careful if you're holding any weekly options, and just keep in mind of this coin flip catalyst that is happening on Wednesday. Now, we also have a lot of earnings this week. Massive earnings. And especially last week, we saw that QQQ dropped 2% because of the Tesla earnings, which went down over 10%. And Netflix earnings, which is going down even more right now. So we have these massive catalysts on inflation, on earnings, which are taking the market to the downside. So the chart itself may look bullish, but we have these catalysts like the Fed interest rate decision, and we have a lot of earnings. So we have Domino's before market opens on Monday. We have Verizon on Tuesday, Microsoft, Google, Snapchat, Visa, Spotify. We have the big dogs reporting earnings this week. AT&T, Meta, Coca-Cola, Boeing on Wednesday. We have eBay on Wednesday. And then on Thursday, we have McDonald's, MasterCard, Southwest Airlines, Intel, Ford, Roku. Man, it's just intense. And then on Friday, we have Chevron and ExxonMobil. Okay, so these are going to be the oil companies. And as you guys know, if you guys watch my videos, I'm watching oil stocks. The setup on the oil stocks looks great. I'm going to go a little bit more in depth in this video, especially with the earnings that are happening this week. But just be careful this week, because there's just a lot going on, and you just have to be aware of these earnings, because they're going to take the market either up or down based off these catalysts. And right now we have been going down with how Netflix and Tesla reported earnings. So let's talk about the SPY and the S&P 500. So we just have two levels for the SPY. Really basic, really simple. We have the 440 level and the 459 level. 440 area is going to be our area for calls, and then 459 is going to be our area for the level of resistance. Now, if we take a look at the chart right now, it looks like we are trying to correct on the daily time frame, especially these two candlesticks. So if we do come back down, 444 is going to be the level of support. So this is the possibility and the probability, especially with the gap down to the downside. So the chart mostly looks bearish right now for the SPY, especially with a lot of uncertainty. The chart is pointing to the bearish, and 444 is going to be our area for the calls if the market does dip down to this level of support. And then we have this level of resistance after that. But other than that, let's take a look at the QQQ. Now, we do have the all-time high level, but only when we break out of the 459 level. But even then, we are just going to be trading sideways on consolidating. So right now, just keep in mind of just the two simple levels, 444 and 459. Let's take a look at QQQ. QQQ looks even more bearish because of the tech earnings that happened, which pretty much took the whole market down. But we're taking a look at the Qs, and we're taking a look at these two levels, 371 and 389. But we're taking a look at the QQQ, and it is starting to approach to the level of support. So 371 is going to be a nice area for calls. So the Qs actually is going to be looking bullish if we can just drop down a little bit more. But again, we have this coin flip catalyst and just a lot of uncertainty with all these earnings, especially on Tuesday and on Wednesday. So we have all these tech earnings. So honestly, the chart itself may look bullish, but we're just going to have some unknown earnings catalysts. So it's going to be a very, very rough week for the market because there is a lot more uncertainty this week. Now, our first play is going to be on oil, and I don't want to go too in depth, so make sure to watch yesterday's video on oil because I go a little bit more in depth. But pretty much, I'm taking a look at the weekly time frame, and I'm looking at a month out call swing for XLE, CVX, and SU. So these are the three stocks that I'm looking at for a month out calls. Now, we do have earnings for ExxonMobil and Chevron Corporation, but keep in mind that these earnings affect less on oil stocks because these aren't higher risk assets like Meta or like Google or like a tech company. So since it's a oil stock, if you actually take a look during earnings, nothing really much happens during earnings for oil stocks. So there's really nothing to worry about with oil stocks and earnings that are happening on Wednesday. So I really love the setup on the oil stock setup, which is going to be XLE, CVX, and SU 1 month out calls. SU is going to be a play for shares. It is a $30 stock. So make sure to watch yesterday's video. I go a little bit more in depth. Now, okay, we have Disney. So we have Disney. We talked a lot about Disney. Not only is it going to be a nice shares play, but August 9th. Okay, so August 9th, so that's around 16 days we have earnings for Disney. And I'm taking a look at some calls. Okay, so shares are good. Okay, shares are good. Undeniably, they're amazing. Okay, shares are great, but I'm taking a look at options. So a little bit more risky, a little bit, but a lot more reward. So we're taking a look at this massive level of support. For Disney, we have this massive descending triangle for Disney, and I'm taking a look at a potential run-up for earnings. But honestly, the chart looks good, but I'm really unsure about the earnings and stuff. But the chart looks amazing. Okay, the chart looks amazing for a week out calls, a month out calls, and we talked a lot about Disney, like how great the chart looks. But again, it's just one of those stocks that Wall Street really hates, especially with this massive gap. It looks nice. So Disney looks nice for a month out calls, but it really depends on you if you want to mess with the rat. So it's going to be really on you. I really love the setup, but again, it's just Disney being Disney for some reason. I don't know why. We have Disney, and then these last three are the shares play that we are already in. So we had our option plays, which are on oil and Disney. Disney is also going to be a long-term play, but these are our shares play. So I only have like 1,000 in each of these. And keep in mind, it's like shares. So we have IWM, massive triangle, looks great. Okay, we just got to hold this level of resistance. We have Snow, which actually closed below the level of resistance, so we need to be a little bit more above this area so it doesn't look good right now. Let's see if they do have earnings. They have earnings in a while, so we definitely do have time for Snow, but Snow's our shares play. And then we also had Autodesk, which also closed below the level of resistance. So during that market drop when Netflix and Tesla reported earnings, Autodesk and Snow also went down, and if we take a look at the weekly time frame, they closed below the level of resistance, so they're not looking bullish anymore. Okay, they need to look, Snow and Autodesk need to look like IWM. Okay, like this IWM setup that we have. We need to close above the level of resistance because that is going to give us confirmation. So overall, we have a lot going on in this week. Okay, we have a lot of earnings going on. Not only that, Wednesday we have a lot going on with FOMC statement. And then not only that, then we also have a lot of great setups, especially on oil. So oil is going to be my main play for this week. We have a lot going on. It's going to be a incredible, and intense week. Be careful with tech stocks. I would honestly be careful with tech stocks and not touch tech stocks this week because of their earnings. And as you guys know, oil and earnings, they're fine because they're oil stocks. But overall, hope you guys enjoyed this video. Subscribe with the notifications on. Almost at 5,000 subscribers. And see you guys hopefully tomorrow. Hope you guys had a great weekend.